Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to a consumer company, consumer, you can say food company, kind of a large cap. So, coming at attractive valuations because the consumption stream has got stalled over the last couple of years. So, we'll discuss about that. We'll discuss a little bit about the markets which are now reversing from those 24,200, 300 levels. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I am not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions with respects to markets or stocks that I have is purely on the basis of my experience into the market over the last 12, 13 years. And whatever decisions with respects to investment or trading you take, kindly take that on note is that it is laden with market risk and you need to do your own analysis and consult your financial advisor before doing that. Now, before I talk about the company in perspective and the markets, here's my request to kindly support me on Patreon. Once you do that, it'll help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership on Patreon or on YouTube or a yearly membership on WhatsApp, you get access to my portfolio, a watch list, discussions on global and domestic economies, analysis on different companies. You have a long-term pick from my side because the markets are trending lower. So one long-term pick every week is provided by me, and whatever queries you're having, I'll be answering that. So the link of all this is in the description. Now, in order to discuss about the markets and the stock in perspective, let me take you to the screener website. So the stock that I want to discuss with you is Britannia Industries, 116 lakh crore market cap. We'll discuss about that, 1 lakh 16,000 crore market cap. But first, let's just discuss about the market. So if you look at it, Nifty is now trending lower. So if you look at the Nifty on a yearly basis, the RSI is around 41. It's not that it is stretched in by any imagination. And if you look here from September onwards, the Nifty has tended lower. Now the next support is around 23,200 levels. I feel that will be broken, but we could head towards 22,400, 500, and that's where there could be immense support. I don't see the market going lower than that. So maybe a 1,000 to 1,200 point decline possible in January. January is normally not the best of months for the markets. That has been the case over the last 10, 15 years. So that is what I have always expected. Over the last 3 months, I have kept saying that if the market goes to 24,000, we'll see a correction, and that is what we are seeing at the moment. And the mid caps are down 2.5, 2.2, 2.3%. I think there will be a correction back to levels of around 54,000 at least on the mid cap index. But if you look at a 5 year chart, then you'll see that 57,000 was the crucial 20-week moving average that is broken today. And so we could head towards the 50-week moving average of 54,000, 53,800 at the moment. That will move higher. So 54,000 or so is what I'm looking at on the mid cap index as a support. I'm not saying it's going there, but there is a possibility that the market at worst could go there. It could reverse in the next 2 3 days, but I think the way FIIs are selling, and it's going to you can say intensify in January, we are going to see further selling in stocks. And if you look at the small cap index, a similar pattern is emerging here, 2% downside. Today, the only saving grace here is that the 54,800 levels of the 20-week moving average is protected. We went there and we found support there, but I think eventually it will be broken and we could head towards 52,000 levels on the small cap index, which is not a lot of correction. The highs have been just recently made of 57,800, just a 10% correction from the top on the small and mid caps is par for the course. And what is surprising is that the Nifty has gone up less than the you can say the broader markets, and the Nifty is falling more than the broader market. So all that theory of Nifty being cheap and so mid cap and small caps have run up a lot, and there'll be a correction and all that. At the moment, till January, till today, what it seems like is that the Nifty is underperforming, is still underperforming the broader markets. That is what we are seeing. On that context, I'm bringing you a stock that has come down appreciably from the top, and a large cap in that domain. So those who want to invest safely into large cap companies and don't want to face the volatility, although the stock is down somewhere around 20-25% from the top, but at the moment it is at reasonable valuations, and I try to bring to you in every video companies that are trading at reasonable valuations. So Britannia Industry is my pick this time around. All these companies that I talk about are from a perspective of 3 to 5 years. 1 lakh 16,000 crore market cap, currently trading at around 4,800. Its high has been around 6,500, so that has gone. So the stock is down around 25-26% from the top. Currently trading at a PE of 54, which is not expensive. I'll just show you. So if you look at the PE of the last 10 years, the average PE has been around 55. So what we have seen is that from a PE perspective, the stock is very interestingly poised at around 54, 55 times. It has gone there a number of times earlier as well, and then taken support. So if you get it here or 10% lower at around 4,400, those will be very interesting levels. Again, we all know about the company. It is India's leading food, one of the India's leading food companies, and it has a legacy of around 100 years. Premium brands in biscuits and you can say other kinds of snack products. You can say for kids in sweet products related to biscuits, kind of products that they have at the moment. Market leader in the biscuit segment, 80% of the revenue comes from there. They have the bread. So the company is one of the largest players in the organized bread market with an annual turnover of over 1 lakh tons in volume and 450 crores in value that they have. They have an 5% into dairy products as well, but mainly bread and biscuits that they are big at, and they make cakes. Britannia cakes is extremely famous, and we all would be knowing, somebody who's born in 80s or 90s would understand that how Britannia cakes came to being and became a real, you can say, talk of the town across India. So, top brand in this segment, top management, I would say, and over the last 10 years have given stupendous returns. If you look at the price chart of the company from around 1,000 rupees, the stock has gone to 4,000, 5,000. So, 4, 5x, around 5x, 6x over the last 10 years. That's what the company has come to being, a double in 3 years kind of company. And now the growth rate is slowing, so the stock prices is slowing, but I think you can get above you can say Nifty returns here from these levels. So if you are shrewd enough to buy at lows and keep accumulating over a period of time, I think Britannia should make you a decent amount of money. What has gone wrong or gone down in terms of the numbers? So sales hasn't been that great, and that has been the case across the consumer segment. 4,400 crores gone up to 4,600 crores, a 5% growth in sales, but profitability dipped from around you can say 870 crores and a margin of 20%. The margins have dipped to 17%, may go down to 15% at worst, but if you keep accumulating over the next 6 months, uh, that would be good. So next 2 quarter results would be priced in here, and probably the stock going down say 10, 12, 13% over the next 6 months would also be priced in. These are the times, in difficult times, top companies need to be bought. So consumption segment altogether, especially which is into the FMCG segment, straight away something like an HUL, Britannia, Godrej kind of companies. These are the you can say times where you should look to buy into such companies. If you look at the shareholding pattern, no issues there, 50% with the promoters. uh, FIIs have sold into it from 21%, it's gone to 18%, and that is the major reason why the stock is down 25% from the top. Sorry, so yes, FIIs and DIIs have accumulated the stock from around 12.5% about 1.5 years back, and now DIIs hold around 16.5%, and public shareholding has remained steady at 15%. If anything, it has gone down from around 16% in September 22, 2 years back, to 15%. So overall, very robust company, top management, and something you can buy for say a 12-13% CAGR return could be possible in the stock if you can buy shrewdly at lows. That's my assessment. So this is a video on the markets as well as Britannia. Please like and subscribe my channel, hit the bell icons, and get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.